Is Mike Sullivan. I'm a former IRS agent and teaching instructor. I've worked at IRS over a decade. I have been in private practice for a long time. I've probably worked over 10,000 cases. I'm a national expert and speaker in IRS tax debt resolution. So my YouTubes are short, they're sweet, to the point. I go right to the heart of the matter, and today I'm going to talk about IRS tax debt relief. There's 5 basic ways that you deal with IRS tax debt. The statute will blow after 10 years. You can file a Chapter 7. You can get rid of the debt if you meet the provisions within the United States Code. And the 3 most common ways I want to talk to today is the currently non-collectible, the payment agreement, or the offer and compromise program. Most of the people that owe IRS tax debt get rid of their debt temporarily through the currently non-collectible or hardship program. IRS will take a current financial statement from you. If it's with a revenue officer in the local office, it'll be a 433A. If it's in the national offices, a 433F. I mean by national, at the service centers. So what IRS will do is they're going to look at your assets, and they're going to look at your income and expenses, and they're going to look at what you're doing and compare that with that of the local and national standards in your area. If they determine that you're not making enough money and you can barely cover your bills per their standard, they will place you into currently non-collectible or hardship. What does that mean? It means IRS will suspend the case for a year or two. They'll grab all refunds, but the case will cycle out after a couple years, and penalties and interest will still run. Some people get away enough with it where the statute completely expires. The next series is the installment or part pay agreement. IRS will take that financial statement, determine you're not a hardship because your expenses are really exceeding that of what they like. You're spending too much money for the income, and IRS may ask for $1,000, $2,000, $3,000, $4,000 a month and put you on an installment agreement. You can also do an online installment agreement. There's qualifications. The third program is called the offer and compromise. I taught the offer and compromise program at IRS. I'm a national expert. It's best to fill out an IRS pre-qualifier tool form online, and you can find out whether you qualify. Generally, people calling my office can find out within about, I don't know, a minute whether they qualify. Do not call a company and ask for an offer and compromise unless you know who you are calling. Let me tell you why. 80% of all the people you speak to are salespeople who don't know squat or dung about the offer and compromise program. The offer and compromise program is a very specific program with very specific things that you need to know. Why? Because they become public record after acceptance. I want you to know the base rule for the offer and compromise. You must give IRS the total liquidity in all your assets. Your home is discounted 20%. You'll head up the values of your home, a pension, a car, bank account, any asset you have. If that comes to $100,000, you have to give IRS at least $100,000. Then IRS is going to look to your income and expenses. If they feel you're spending more money than you should, according to the standards in the county you live, IRS has a multiplier that they are going to use to increase the offer and compromise. So those, once again, are the tax relief programs. The currently non-collectible or hardship, which most people are in, payment agreement for those people who kind of make about $6,000, $7,000, $8,000, $9,000 a month and higher, or the offer and compromise to those who meet the criteria for settling their debt through the IRS offer. If you like what I've told you, please like me, please subscribe, do whatever you want. If you have comments, please leave them. If you want a subject you want me to cover, if you leave it in the comment bar, I will go ahead and probably do a YouTube. That's how I get the content to go forward. Thank you so much for listening.